Welcome in, folks. Got some subjects to speak about in this one here today. First off the top, we're going to talk about AMD stock in this one. AMD flirting around $125 here today, so we're going to talk about what's going on with AMD stock. How much longer is this downtrend, which is a pretty significant downtrend. How much longer is this going to last? So we'll get into that at the top of this video. Then we're going to react to this one, Uber. I'm getting a lot of questions about Uber stock. You know, does it make sense to buy this stock? It's been plummeting here recently, so we're going to talk about Uber in this video. I want to react to that video. Robinhood's another one I get a lot of people asking about, so we're going to react to this video in regards to Robinhood. I want to share my opinions and perspective, so I thought that'd be great to talk about Uber and Robinhood, two stocks I get asked about a lot recently. Then we're going to react to this one. PayPal got an upgrade here today, so we're going to do Kramer stop trading on PayPal, and then RH is moving up massively here today. This is a stock I've always been interested in. I don't personally own it, but it's always a really good opportunity from either the put side or the call side, depending upon what type of cycle you're getting into. So we'll talk a little bit about that one in this video here today. Okay, appreciate everybody joining me as always. All I need from you guys, one thing only. What is it? It is for you to smash that like button. That's all I need from you guys. I appreciate you being here. If you want to subscribe, you can certainly subscribe. We just hit a new all-time high subscribers in the history of this channel. Appreciate you all for being here. And pin comment down there today if you're looking to apply, join my private group, get access to all my premium courses, access to my 6, 7, 8-figure Discord chat, all that good stuff. If you want bundled in 1000xstocks.com access, we can do all that for you. That will be pinned comment down there. Fill an application. We'll see if we can get you in there next week. So what's going on with AMD stock? Here's what's going on with AMD stock, okay? So obviously the stock has had a pretty epic move down from where it was back in March. March, this stock was $210. Here today, it's been flirting around $125, $126 a share, right? Which is a substantial 8 or 9 month move down, right? Now, what's going on here? So, why does this stock keep going down? Is it going to keep going down? Let me answer that for you. The reason this stock is going down right now has absolutely, let me be crystal clear about this, this is absolutely nothing to do with the fundamentals of the company. We don't even have any fundamental news to base anything off of right now in regards to AMD. Their earnings came out, their earnings have now been out for a month and a half, right? They were very good earnings. They upped guidance. Like, everything's phenomenal as far as that goes, right? Conference call was very good. There's nothing bad to say there, right? NVIDIA numbers were very good, so it's not like NVIDIA numbers were some bad numbers that sent a horrible sentiment through semiconductors or something like that. NVIDIA's numbers were very good. Their conference call was very good, right? We don't have anything fundamental to go off of. It's not like all of a sudden Meta and Microsoft and all these massive companies are all of a sudden like, we're done buying semiconductors. No, that's not happening at all. It's not like AMD released some new chip and, it's a flop, or there's nothing like that's going on in the market. None of this is fundamental based. What it is it's stock based. What's going on right now? Well, the same type of people that buy AMD stock are the same type of people that would buy NVIDIA stock, which is the same type of people that would buy Meta stock and Microsoft. And a lot of other stocks have done very well this year, made a lot of money, right? And so what happens is, Tesla, another perfect example, same person that would buy an AMD would probably buy a Tesla or a Palantir, right? If you made a lot of money, you made a lot of profits on, those Teslas, Palantirs, and whatnot. Keep in mind, every single day the market opens, there has to be a seller for each buyer, right? Like Tesla today, right? Stock's up. How much is Tesla up here today? Tesla's up 3.5%, right? Tesla's up because there's more buying pressure than selling pressure. But for every one share that's bought of Tesla, there's one selling share of Tesla, right? It's not like there's just magically an indifference there. There has to be a seller for every buyer. So that means there's people likely taking big profits on Tesla today, right? And Palantir, and that happens day after day after day, right? NVIDIA, all these different stocks. And so if you have these massive profits, you want to offset that against some losses. And so you look out there and you're like, okay, where are my losses at? Oh, AMD. You know why? Everybody that's bought AMD in the past years lost money. This is a 1-year chart for AMD. If you have bought AMD at any point, even in the last few days, right? Like I bought some shares at 128 here recently, at 130, at 132. I'm down on those. Everybody that's bought AMD stock in the past year is down on their shares as of right now. Everybody, okay? So that means you're going to look at your portfolio and you're going to find there's one stock that you have to offset your gains against, right? So let's say you made $6 million on Tesla this year. Let's say you've taken $6 million of profits. You're some sort of small fund or something, right? Which, yeah, $6 million is a small fund. So, okay, you take your $6 million in profits off Tesla, right? Now you're like, crap, I got a lot of taxes I need to pay, and some of those might be short-term taxes, right? But you're like, oh, I bought AMD earlier this year at 185. and it's 125 today, I could offset a lot of that $6 million gain, so you don't have to pay as many taxes. Then you can say, I'll buy AMD back at the beginning of 2025 at some point in time. Maybe it's January, maybe it's February, somewhere after the wash sale ends, right? Boom. That's what's going on with AMD. Nothing to do with fundamentals, nothing to do with anything other than simply this is an easy tax loss harvest stock. And it's the same exact stock. That's the important thing to understand. You gotta understand who would buy a stock like AMD. This is so important everybody understands this and gets this through your mind. Because it's not just like random stocks are just tax loss harvesting. No, this is a very specific stock. It's the same exact stock that a Palantir shareholder would buy, a Tesla shareholder. Guess who's buying AMD right now? The guy in front of you. Guess what the stocks are I own? Oh, Tesla's a major position for me. Oh, Palantir's a major position for me. Oh, Meta's my biggest position in the public count, over $1 million position. It's the same buyer pool, right? And it's the one that sucks. It's the one that everybody's down on. Easy tax loss harvest. And so, how much longer does this last? My guess is 1 to 3 weeks. Why is that? Well, we don't have much left in this year, right? We have what, three weeks left in the trading year? And we have holidays in between there. Christmas Eve, Christmas Day. We have New Year's Eve, New Year's Day, which some of those are partial days. Boom. And then tax loss harvesting's over in regards to AMD. And then starting in January, guess what happens? We start to get back to the fundamentals of AMD. People are going to start paying attention in 25 to those earnings. They're going to start paying attention to new chips that are coming out, right? And other new products and services. How's the ZT acquisition, systems acquisition go? And then we get back to full fundamental worry in regards to AMD. For right now, it's irrelevant. People will sell AMD right now, regardless of the fundamentals, regardless of what chips they have going on. Doesn't matter. Doesn't matter. They just like, if you want to offset your gains, boom, AMD's right there. And what is the belief that AMD is going to magically go up in the next 1 to 3 weeks? Like, is there something magical? No, AMD's earnings aren't coming anytime soon. It's very doubtful AMD launches some new chip out of just nowhere in the next few weeks. None of that's playing out, right? So the earliest you're going to get any sort of news cycle in regards to AMD would maybe be CES, right? The Consumer Electronics Show that happens in Vegas each year, which is in January. That's the earliest you could get anything to likely move AMD stock up in a substantial way. So for now, people aren't scared about it moving up. They're just saying, I need to offset these gains somehow. And AMD is an easy stock to do that. And so you got to understand there's different market dynamics that, as a fundamental investor, as a long-term investor, sometimes it can be frustrating, folks, to deal with this sort of, short-term stuff that goes on with regards to stocks. But you just got to understand stocks don't always move off of what's going on fundamentally in regards to a company in a short term. Over the next 5 years, AMD will move. If AMD's business model gets substantially better, their revenues and net income skyrocket over the next 3-5 years, AMD stock is going to skyrocket over the next 3 to 5 years. That's going to end up being a $300 stock, $400, $500, $600, $700 stock over the next few years, right? So if their business model falters, and that's going to go that way, right? I spoke a lot about AMD stock recently on the main channel. I don't know if you guys follow me on the main channel. It's called Financial Education. I'm sure most of you guys do. Probably 90% of the people that are watching this video follow me on there. But for the 10% that don't know it, Financial Education, I spoke about it right here in this video. Buy AMD stock and don't stop buying. And then I also spoke about it in this video I came out with yesterday. I spent $125,000 on this stock here today. So if you want more AMD analysis, definitely check out those videos on the main channel. All right, let's get into Uber, Robinhood, PayPal, and RH.
I didn't want it to get lost in the shuffle. You mentioned you were buying more Uber. It's been a dip, to say the least. Shares are down 25% from the all-time high hit just a couple of months ago on October the 11th. You want to just take us through why you decided now is the time to buy more?
And real quick, let me explain to everybody why Uber stock. So if you're wondering, why is Uber stock just plummeting here recently? The reason Uber stock is plummeting, and specifically recently, is there's new data that just came out. And Andre, who helps me run the private group, shared this data that's very important. For anybody that's thinking about buying Uber or Lyft stock, it's very important you understand this data. In San Francisco, Waymos are in that marketplace, right? And what you've seen recently is Waymo climb to Lyft's market share in a matter of just a year. In a matter of the past year, Waymo's went from hardly any market share to no market share to literally they're already at Lyft's market share. Uber and Lyft's market share in San Francisco is going down rapidly Now you say, well, that's just one market. That's just San Francisco. What happens when Waymo's in all the different markets? What happens when Tesla has their autonomous vehicles in the market in the next year or two, right? What you're going to likely see is if the trends keep playing out, which is probably going to play out, Uber and Lyft's market shares are going to plummet. Waymo's market share of ride hailing, if we want to call it that, is going to skyrocket. And the same thing for Tesla, right? This is why people are saying, you know what, I don't want to own Uber and Lyft. And people also don't feel confident in Uber's and Lyft's strategy. And you can't compete with Waymo and Tesla long-term price-wise. How are you going to compete if you got a driver in the front seat? You can't. Travis, the guy who started Uber, he knew that. He spoke about that, probably 7, 8, 10 years ago. The biggest expense to Uber is always a person in the front seat, right? And so at the end of the day, if somebody goes to get a ride from point A to point B, right, and they go on Waymo and it's $10, and they go on Uber or Lyft and it's $20 or $30, right? I wonder what they're going to pick. Of course, they're going to pick Waymo. Like, that's just how it is, right? And so do keep that in mind. All right, let's get into why JB's buying some more Uber.
There's this weird dynamic going on in the market where they equate everything that's good for Tesla as being bad for Uber, which is really weird because there are no cyber cabs on the road, and there aren't going to be tomorrow or the next day. But for whatever reason, every time Tesla rallies, Uber sells off. So there's like this misperception in the market. And they also equate Waymo developments with being bad for Uber, when meanwhile, the number one problem Uber has is capacity. They don't have supply. They want more. They want there to be more potential rides on the road, not less. And they have a partnership with Waymo that they're testing in Austin and Atlanta. And I think it's like a kind of situation where people just don't understand the way this ecosystem is going to develop. They think it's going to be this winner-take-all thing, and all of a sudden, no one's going to need an Uber because there's going to be 20 million Waymo cars on the road. And of course, that's not what's about to happen.
I got to push back against JB. First off, JB and myself, we probably agree on a lot of different things. I've reacted to so many videos of Josh Brown over the years, last couple of years I've had this channel, right? And a lot of times I'll agree with him on many different subjects. I don't agree with him on this one. Here's why. He's right in the sense of there's not going to be magically, a trillion Tesla robo-taxis on the road tomorrow or Waymos. 100% right. But the problem is it's death by 1,000 cuts, right? In regards to the situation. The issue is year after year after year, Waymo and Tesla eat Uber's market share, right? And Uber's market share just gets lower and lower and lower and lower, right? That's an issue. Now, you could say Uber has food delivery, and that's certainly something they have that I think is sustainable more long-term. But the issue is their core business is not Uber Eats. It's not food delivery. Their core business, their most core business is people needing a ride somewhere. And so if your core business just gets eaten slowly but surely year after year after year for the next 5-7 years, what are you going to have left 5-7 years from now, right? Now, the partnership with Waymo, that's something that I think looks good for Uber, but at the same time, the issue there is Google with Waymo, they might end up just going solo. They might not care to really be on Uber unless it's just some sort of advantage to get people to be aware of Waymo. But then they still might go their own way over time, right? Where people go directly to a Waymo-related app and they book their ride that way. So, these are risks, and I'll be going to San Francisco not too long from now, and I'm going to make sure I take a Waymo at some point on that trip, if not a few Waymos, because I want to experience it. I want to see what this is going to be all about, right?
So the stock is 30% off the highs. It's in its worst drawdown since the 2022 bear market and the third worst drawdown since inception. It's 30 times trailing earnings, 26 times forward earnings, way too cheap when you consider the growth rate. The RSI is completely washed out at 28, severely oversold. And if you look back at the average return for Uber 1 year later, following an RSI of 28, it's 48%. So I think the stock's a screaming buy. Goldman Sachs today agreed with me. Their analyst, Eric Sheridan, made it the number one pick, the top pick in the space. because of that risk reward that they talk about. Their target is 56% higher than where it's trading. A $96 target.
$96.
Yeah. Here's what he has to say. Uber is mired in a series of short-term debates. I agree. The debates range from inflation and pricing to the rise of autonomous vehicles. I think the bears are on the wrong side. Goldman's expected CAGR is 16% on gross bookings and 39% on EBITDA between the years 2023 and 2026. And after listening to the CFO speak at Barclays earlier this week, I've never been more confident that this company has everything going for it. So I wanted to add to it. It's an average up. My average cost is significantly lower than where it trades, but I don't care. When it gets to 100, which is where I think it's going, I'll have that much more to celebrate.
So here's the other issue with Uber, right? In regards to what will likely be their two main competitors over the next 5 years, right? Their two main competitors have nothing to do with Lyft or DoorDash. Their two main competitors for Uber are what? Waymo, which is owned by who? Google, and Tesla. Here's the issue. How does Uber make all its money? Uber makes its money from what? From rides. Like that's their cash cow business, right? On the flip side, Google, how do they make their money? It's not from rides, it's from advertising. So Google has this massive advertising network. They could easily advertise everywhere they want to possibly advertise about Waymo, right? And get the word out more about Waymo. Tesla could invest insanely aggressively in this because this is such a huge opportunity for Tesla. And Tesla has this incredible balance sheet of, it just keeps climbing. Now it's like, last time I checked, I think it was $35 billion plus of cash, right? And they're likely going to get exponentially more profitable over the next few years because their margins are now looking like they're going to start going back up substantially in regards to cars they sell. And then their energy business continues to boom for that company, and they're going to sell more and more software, right? More and more FSD packages, which on monthly plans or yearly plans is going to help their margins, even more. And as a supercharging network, it's more built out, right? And when I say built out, I don't mean them actually building more supercharger stations. I just mean literally more and more Teslas on the, supercharging, or just cars in general, right? Because they're partnering with other cars. Tesla doesn't need to make bank off this initially, but Uber does. That's the issue. And that's why Waymo or Tesla are likely going to be able to undercut Uber's pricing. And I'm somebody that I would love to buy Uber stock. I love falling knife stocks. You guys know that. And I've owned Uber in the past. I owned Uber many years ago. I like Uber. But it's difficult to get positive on that stock now. I got to be honest with you guys. When you know what's coming over this next few years, and the issue is everybody knows what's coming over the next few years, right? We know, if you go out 5 years from now, I think it's going to be more commonplace that when you go to get a ride, there's going to be no driver in that seat than there is a driver in that seat, right? So that's going to be tough, right? And once again, it's not like Uber gets eliminated overnight. It's just a slow deterioration over many, many years, okay? Alrighty, Bryn Talkington buying Robinhood.
And the first one, to me, relates to what's happened in momentum this week, which has been wrecked. Mongo's down 18.5, for example. Supermicro 17. I've mentioned AppLovin every day because it's been an extraordinary drop of 17% this week too. Robinhood, I think you can.
And so what could happen at Uber? Just one last thought on Uber is the stock. If you're wondering where the stock goes from here, my guess is a stock just is range bound between probably $50 and $100 for probably the next several years. That would just be my guess, right? Maybe it starts to approach 100, if people feel more confident, they have some strategy or bigger partnership with Waymo or Tesla or something like that, right? But it's probably just range bound between 50 and 100 for the next many years, probably. That's just my guess on how it plays out.
That list, if you want to, down 4%. Why do I bring that up? Because you bought it, Bryn. It's a new buy, and why so?
Yeah, I think we all lived through Robinhood in the GameStop days of 2021, and
One last thought on Uber. What could fundamentally change the story from Uber? It would be a 10-year partnership with either Tesla or Waymo, an exclusive partnership for the next decade with one of those two companies. That could get me to think differently, right? If you go on the Uber app and there's traditional rides, but there's also you know, a driverless vehicle. Like, if there's like an exclusive 10-year deal or something, okay, then we're talking, because then you have more clarity, and the worry about them just being eliminated, you know, slowly but surely over the next 5 years would go down, right? But outside of that, you know, it's tough to get behind that stock. That's probably the only thing that could fundamentally change the story.
Definitely, you know, no fan of a lot of things that were going on within the company. And I think over the last couple of years, we've really seen this company grow up. And I think what's spectacular as an investor, you can actually go on their website and they print out, they show their monthly metrics, which I think is very helpful for a young company like this. And when you look at what's happening, you know, just looking at this year, their assets under custody have gone from 100 billion to 190 billion. And their crypto trading, which was like 5.9 billion in January, in November was 35 billion. And so I think you have this company that is continuing to grow and get market share from the Coinbases, the Schwabs, the Fidelities. But you have this intersection, and Vlad talked about this, of you have this 2-decade wealth transfer between the baby boomers and the kids and the grandkids, which is a secular trend. But in the short term, you know, in February, we will get their earnings, and they're looking for revenue and earnings growth of 70 and 200%. And so I think this is a really, yeah.
I wanted to ask you about that. So the stock has been an incredible performer this year.
Yeah.
It's really one of the biggest back from the dead stories in the markets in 2024. And they deserve a lot of credit. From my perspective, it seems like they're not picking a lane, and they are expanding horizontally into two areas that seem to almost be counterproductive vis-a-vis each other. At the Market Council Summit in Vegas this week, Steve Quirk, who's their head of brokerage, formerly of TD, was walking around talking about the custody business, which they're now in via the acquisition they just made.
Yep.
But then they issue a press release saying, we're going to do sports gambling. Will a lot of financial advisors want a custody on a platform that's also open to people gambling on football and basketball games? So I guess I wonder, going into 25, what is this company going to be? Is it for gamblers, or is it for people entrusting their retirement savings?
Yeah, I think Vlad would say that they aren't meaningfully going into sports gambling. And so he was on, I think, with Andrew and Joe, and was saying that's not what they're going to do. So I would question that. Could be wrong, but I don't think I am. And so I think to me though, as an investor.
By the way, I don't think that's a bad strategy. I think they should go into sports betting. But let's go ahead and react to the rest of this, and I'll share my full in-depth thoughts about Robinhood.
Which, you know, Fidelity and Schwab have 13 or 14 trillion. This company has 190 billion. But I think what's important, what I think they're doing to help younger investors, is the Robinhood retirement program has 10 billion in assets under custody, so very small relative to the world. But as these newer investors are getting onto this platform, I think it's going to be very sticky. But they're also doing this Robinhood retirement. They'll do a matching, which to you, Josh, you and I are in the same business. That's so important to get away from this memification and doing zero-day options. And so I just think this is a company that I wanted to take a toehold position. I like what they're doing. Their metrics are great. And I just think going into the next decade or so, this has the potential to be a much larger company with a much bigger impact.
All right, we'll watch that chart. Bryn, thank you for that.
So in regards to Robinhood, how do I feel about this company? So at this point in the cycle, I don't love it. And here's why. Bitcoin's obviously made an incredible run from, where was it 2 years ago, 15K or whatever it was, less than 20K 2 years ago, to now being 100,000, right? The stock market's been on an epic soaring, situation for the last 2 years. We all know that, right? The issue with buying Robinhood at this point in the cycle, right? It doesn't mean it can't be money made. It's just more dangerous now at this point in the cycle is whenever this cycle breaks down, whether it's 6 months from now, 12 months from now, 18 months, 24 months, what's going to happen to Robinhood? Their assets under management's going to start going down. Their trading volume's going to start going down. Boom, boom, boom. It's a whole domino effect, right? Same thing with Coinbase. And so those sorts of stocks, like the best time to buy those sorts of stocks, whether it's a Coinbase, Robinhood, is when retail investors are like dead, when the market's dead, when like everybody's gotten destroyed and, it's a situation where it seems like no one wants to buy crypto. Like no one's talking Bitcoin, no one's talking stocks. When that happens, that's the time to load up on those sorts of stocks, right? Because eventually it's going to be a revival and people care about stocks again and care about Bitcoin again. But when everybody's talking about it, right, which stocks have a lot of attention right now, Bitcoin has a lot of attention right now, that's a time you got to be much more wary because those companies will report phenomenal numbers in the short term. But as soon as you get the next bear market, assets under management going to go down, trading, everything's going to go down, 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 right? So assets under management is it's kind of such a pointless metric for Robinhood or some of these companies because like everybody's portfolios are up substantially, right? Public count at this time last year was like 1.7 mil. Now it's 3.1 mil. Guess what? Under Fidelity assets under management, I'm sure it's gone up a lot just for me personally between the public count and my other portfolios, right? Same thing for everybody else out there. So yeah, it's very dangerous stock going into this stage of the cycle. That doesn't mean there can't be some more squeezed from a Robinhood and it can't go to $50, $75, $100 short term. But I can just tell you, you're playing with fire there because as soon as the market breaks, whenever that is, and when I say market, I'm talking Bitcoin and I'm talking the Nasdaq. As soon as those two break to the downside, whenever that comes, Robinhood will tank off a cliff. Same thing with Coinbase.
PayPal gets an upgrade by Wolf. Now you could say, well, Jim, it's already up more than 40%. No. This is Alex Chris. We first met him when the stock was in the 50s. David interviewed him. If this stock comes down, you want to buy it because he's fixing PayPal, and they've got a big February analyst meeting. You're going to see how much he's fixed. It was a company that was despised in the end by Wall Street because of a lot of overpromising and under-delivering. And this man has had to apologize for a lot of what's happened in the previous regime, but he's about to go on the offense. He's a very strong story.
Yeah, it's been a series of upgrades. I think B of A a few days ago.
That's not idle. It's because the company is becoming maybe the most important fintech, and I know that a firm's done a great job.
There's some news about a new loan partnership today.
Yep, but I just think that PayPal's doing a lot of things right, and is a loved brand. They never killed that. They did a lot to destroy it, but they couldn't kill it.
Interesting, too, that the founders, the diaspora from PayPal, has found new life as policymakers.
It's a kitchen cabinet.
Yeah. How about tonight?
Well, I've got an outfit that really has the pulse.
So, I think there's a big lesson to learn in regards to PayPal, right? And so I was buying PayPal extremely heavy at the end of 2023, right, and into the first half of this year. You've got to beat Wall Street to the puck, essentially, many times to get the biggest gains in the market, right? So if we go back a year ago, no one cared about PayPal. Like PayPal was in the 50s, 60s, like it was just like dead, forgotten, kicked stock, trading at an incredibly low forward P that actually had decent growth rates, right? And then Alex Chris coming in the company, I think there was a lot to be positive about. The man came from Intuit, and I would talk about all that. I'm like, this man was one of the most important people at Intuit. Intuit's one of the most loved stocks in the stock market over the past 15 years. I think he's going to adapt a lot of policies that are going to make a lot of small businesses and mid-sized businesses really like PayPal and Venmo and then the consumer. And I ran through all that, right? And invested heavily. And obviously I've reaped the rewards of that now. Because now you see, over the last few months, what happens. I'm done buying PayPal now. Like I have my positions fully built out in the Patreon portfolio and the public account and other portfolios. Like I'm good. But now you see Wall Street all come into the stock over the last few months, right? Upgrading, like they're all piling on, and that probably won't slow down anytime soon. And so, don't be surprised if PayPal's 100, 120 in the short term and then goes to 150, 200, something like that. And the good thing with PayPal is I feel very comfortable holding that stock. Down times, up times, anything like that. Like it's not like one of those stocks where I'm like, oh, if things went south, like I'm so scared of PayPal. No, the stock would get hit along with everything else. But as far as the business model, they got a really good business model, and they just continue to build that out on the PayPal and Venmo side. Alrighty, last one up here. Let's talk some RH and high-end housing.
A negative impact to margins as a result of the most recent communications regarding the potential for increased tariffs in 2025. We have been proactively moving sourcing away from China over the past several years with the expectation of fully exiting the country by the end of the second quarter. We are also transitioning products manufactured in Mexico and believe we can successfully reposition our sourcing with no disruption to the supply chain.
Gary Friedman of RH is watching that in his mad dash.
Look, there are many things that have been in play. I've had Gary on a bunch of times, and Gary had to deal with the idea of pulling out of China. He was most concerned about the quality of what happens when you pull out of China. What happens to the quality if you go to Vietnam? He was not initially happy. He's been working on that. He's been very much in sync with what Trump expected, so he's not blindsided. I would tell you that in a market where the worst housing markets, he would say, in 3 decades, he pulled it off. This is finally there. A lot of his European expansion is good. In America, it's been turning. It's well ahead of where I thought it was going to be, even last quarter. My hat is off to him. There's a gigantic short position. Now, some of it's gets to convert, but Gary bought so much stock, and people just felt he was rolling the dice. But Gary knew his business, and I think he's a delight. I think he's a competitor like none other. And congratulations, Gary.
Yeah. Orders up 13 and accelerating into November. I think they were up 18.
I thought that he was going to look. I knew because I had him on last time. I could see the trajectory.
Yeah, but these are such easy comps they're coming off of. Let's not act like this is some incredible numbers.
But there were people last year who thought it was going to be to minus, just minus. And Gary willed this. Carl, he is an inventive. If you ever tell him, like I told him, I like these shares, like send a picture of the chairs. Tell me about the shares. Where are they? How do they look? I mean, the guy is so competitive, and he really, really thinks that everybody else has no clue of how to do his business. They're not furniture.
Yeah, I mean, RH, obviously a name I've really, really liked. The issue with RH, there's a few issues. Obviously, I didn't like what Gary did in regards to the balance sheet. I spoke about that many times. Additionally, high-end housing market still sucks. At some point, that's going to turn, but it's still not in a good place. But you can look at that as a positive catalyst. Like, well, it's going to turn eventually. That's fair. There's 2 other main risks. One, they just spoke about tariffs. And what does that do to pricing? I mean, RH prices are already insane. Anybody that I own, a lot of RH furniture, and I can tell you the prices are ridiculous. How much more ridiculous are the prices going to get if certain tariffs come out, right? Additionally, you have to consider with a business like that, they're moving big stuff around. And I think there's actually a decent probability we could go through I think oil price is a decent probability oil price could go up quite substantially over the next year or two. I think everybody's just banking like oil price is going to stay low and go down over the next year or two. I actually think there's a decent probability oil price could go up substantially over the next year or two, which if that happens, that's going to obviously hit the margins of somebody that's transporting this massive stuff all over the place, right? And if shipping cost goes up substantially, I mean, then you start to get in a bad margin dynamic in regards to RH, and people start to worry about that. So that's just something that can be considered, but it's more like second half 2025 into 2026 worries in regards to that. So for now, it's party on, right? But will I be buying RH here? No. At some point, I'll probably be an RH shareholder, but it's not right now. Okay. All right, guys. Appreciate you joining me as always. Thanks so much for being here. I hope you're enjoying your gains in your portfolios, and hope you continue to take advantage of deals out there. Pin comment down there if you're looking to apply. Join my private stock group. Get access to my best course, all my course curriculums, as well as access to the Discord chat, all that good stuff. Additionally, that will be pinned comment down there. And then if you haven't got to check out some of the recent videos on the main channel, you might want to go ahead and do that as well. Much love and have a great day.